Lots of joins. Hey everyone, if you're just coming in, good to see you. We're just gonna give a couple minutes for all of you to link up on Zoom.
See you, ladies.
Okay, thanks, Kate.
Thanks, Kate.
All right, 2021. I think we have a full house today. So we'll give it a couple more minutes for folks to come in. And I want to thank all of you for the thoughtful notes that you sent when you registered. It really helped us to figure out kind of what your questions were going to be, how to balance the time on this. So I thank you for being very specific about what you wanted to get out of this, because it's helped Claire and I design the session. All right.
Yeah. So we are recording, and I'm here speaking on behalf of CCI. I just want to say that we will make this recording available to everybody, as well as a copy of the slides. So you'll be able to access that.
And in a quick upgrade, we added transcription this time around. So we'll send you a transcript for those who would like to read.
So everybody who's registered will have been on CCI's website already, but just on behalf of CCI, I just want to welcome you all again. Most of you probably know something about our organization, but we are an art service organization based in Los Angeles and San Francisco, and we support individual artists, arts workers, arts collectives, creative businesses, creatives of all kind. And be sure to check out our website for the emergency resources Google Doc that I'm trying to keep updated as much as possible. There's constantly new emergency fund opportunities being created and launched. And we are administering several of them ourselves at CCI. So be sure to check those out or follow us on social media. And I'll let you guys take it away whenever you're ready.
Okay. All right, well, thank you everyone for having us back. I know there are a lot of folks that joined us for the first webinar, and thank you to CCI and Allison for having us back. We did a webinar back around April 13th, kind of about your general CARES Act kind of funding options. And we thought this was a good time, as many of you got funded in the second wave, to follow on with making sure that we were clear on how to get forgiveness around your your PPP funds, since there are a lot of rules and they are ever changing. As much as just late yesterday, we got some major updates. And so, want to make sure you know what they are today and what we do and don't know. And then also for those of you who have found this funding is not going to be as useful for you, or you just decided not to get it, or you didn't qualify, we put together some additional ideas of both some alternate loans and some revenue sources that may be something for you. So in the course of this, please feel welcome. There's a Q&A button at the bottom of the screen. Please feel welcome to drop questions in there at any time. We'll address most of the Q&A at the end, but if there's an in-progress question, depending on whether Claire or I is talking, one or the other of us will try to address questions in the Q&A as they're coming in, if they're kind of in the flow of what's going on. And let's see, and you're welcome in the chat to, kind of pop in question or pop in commentary, say hello, let us know how things are going for you. So I'm going to go ahead and open up the presentation from here. Okay, go. Bear with me. The fun of Zoom. I'm sure you're all totally used to this by now. Let's go over here. All right, here we go. We'll bring this up onto the full screen. All right, there we go. Okay, so for those of you who are, this is your first webinar with us through CCI, I'm Jill James. I'm the CEO and founder of SIF Industries, and we work with small business owners, particularly from creative and non-managerial backgrounds, to help those founders become CEOs of their own businesses by helping with their operations, finance, and strategic planning. And with me is Claire Van Holland. I'll let her introduce herself.
Hi, everybody. I run the CV Ledger. I do a lot of bookkeeping and accounting for small business and creatives, and just help everyone get their numbers and systems together.
Cool. So there's a little bit about us in the deck. If you want to get in touch, our contact information is in here if you have follow-up questions. But we'll go ahead and jump right into it. So we'll start off with the section about the PPP. We'll do some in general. We'll talk about if you are self-employed, there are some exceptions and special calculations that you need to do. And then we did some starter Q&A just to get through some of the common questions that Claire and I get, the questions I had for Claire, since she is my bookkeeper. So we started with the questions that I had. So we'll take you through all of that. And then the second section is getting into more of those alternate loans and revenue producing opportunities. So PPP, so everyone got their loan on a different day, right? So there is an 8-week timeline to use the money, and your timeline starts the day that the money hit your bank account. For some of you, if you're self-employed, you might have gotten 2 loans, one for your EIN and one under your social security number as self-employment. Those will run on different 8-week clocks if you got the funding on different days. So there are a couple things you have to keep track of. So make sure you know the day that the money hit your account, and 8 weeks forward from that is the last day of what we'll look at in terms of your spending toward forgiveness. Separately, June 30th is a deadline for rehiring employees at the 90% level. And we're going to go over more specifically what employees that impacts, at what level you need to bring them back. But these two things are separate. There's a clock for using the money in your loan at certain levels, and then there's a clock for bringing employees back. So make sure that you're clear on like what your 8-week timeline is, and then the rehiring around June 30th. The importance of the June 30th deadline is that after June 30th, you can start providing documentation to your lender in order to get forgiveness for the loan. And the forgiveness is for the principal and any interest that's accrued up to this point. You have 90 days to do that, and then the lender has 60 days to get back to you. But if you are eager to find out if you have forgiveness, what we're going to walk you through today is how to make sure on the first possible day that you're ready to apply for forgiveness, you have the documentation ready, and you can get it in as quickly as possible. Okay, so the first PPP forgiveness we'll go over is with W-2 payroll. So this is, you have employees or you're an S Corp, C Corp, and you pay yourself on a regular payroll system. So the first allocation of your funds is that 75% of the total amount that you got on your EIN has to go toward payroll expenses, right? And the payroll expenses that count toward this are wages, salaries, commissions, and tips up to $100,000 a year. So if in these 2 months, you can pay yourself at the level of $100,000 with these funds. Any sick leave or paid time off that is not covered by the FFCRA, that's the federal leave policy specific to COVID-19. Any group health benefits. So if you are in an individual health plan, you cannot use this for health costs. But if you're on a group health plan, you can use this to cover your group health benefits, and that counts toward your total payroll spending. And your state and local payroll tax. So a little bit tricky here. The federal government still wants their payroll tax. They don't want you paying it with PPP. So you have to net out the federal employer payroll portion of payroll tax. It does not count against your 75%. So the good news on that is most payroll systems have set up a worksheet where they'll show you with each payroll that you run how much you've used against your payroll and take this amount out for you. But if they don't, again, just know that you need to take out your federal payroll tax, and that doesn't count toward your 75% allocation. So the other 25% can be used on qualified expenses. So the SBA is defining qualified expenses as group health benefits above and beyond things from payroll, contributions or matching to retirement plans, utilities, phone, mobile phone, internet, power, gas, water, trash, this is as specific as they've been about utilities. So it seems like it's a more traditional utilities definition than perhaps like other subscription services or other things that you have. Like this is so far explicitly what we know is absolutely okay. There may be some additional definition as we go. You can also pay rent, business mortgage interest, or debt interest, but you have to have had the mortgage, the lease, or the debt, say, you know, on a credit card or on a loan. You have to have had that in place before February 15th. So as long as you had a lease on February 15th, or you had, like if you've refinanced in this period, then you've reset the clock, so your mortgage interest won't qualify. But as long as you had some amount of debt, mortgage, or rent before February 15th, you can pay the interest only on your mortgage and your debt, and the full amount of your rent. And then the last piece is in terms of this 90-90 rule on bringing people back. Okay, so you have to, by June 30th, bring back 90% of your full-time employees at 90% of what you paid them in the prior period. And we'll get into really specifically about what is the prior period and how to calculate that. But it's okay if you reduce staff or reduce salaries between March 1st and April 15th. But you have to restore it by the end of June. So it's okay if you go all the way through your June 15th payroll, but for June 30th, you have to restore your headcount, and you have to restore 90% of the original salary for each of those individuals, not as a whole, right? So 90% of the people, and each individual counts and has to be back at 90%. Your part-time staff are not included in this. So again, we'll go over a calculation table here a little bit later. You cannot pay 1099 contractors. Anyone who is a 1099, you will not get forgiveness for using the funds for them. So make sure you are crystal clear on who's on your payroll and who's a 1099 before you use the funds for that. So for self-employed forgiveness, you've probably been wondering, it says payroll, right? And you don't pay yourself payroll, you just pay yourself as you go. So there is a calculation rule of how you're going to calculate your payroll, and you don't have to pay it out every 2 weeks or anything else. It is a one-time amount that you pay yourself that's covering the 8 weeks. So if you want to pay yourself this tomorrow, you can do it in the full lump sum. So the way you're going to figure out your self-employment payroll is you're going to look at your 2019 Schedule C income, your profit, not your revenue, your profit, from business activities. You're going to be paid 8 weeks of that. So you're going to use 0.154, you multiply your profit by 0.154, and that's your owner compensation replacement. And that's an amount that you can just simply transfer from your PPP account, pay to yourself, and note as owner's compensation replacement. You can pay it to yourself in bulk, one time, for the entire period. And there's an example here. If your Schedule C was $10,000, then you could pay yourself $1,540 in a lump sum as your one-time payment. And so you can, if you have a separate PPP account, you can transfer this amount to yourself at any time during the 8 weeks. So again, okay to do it tomorrow and use it, you know, for the rest of the time, and you've met the payroll requirement. Okay, so you don't have to set up a payroll system. You don't have to do any you know, special type of payroll activities. You just simply can use this calculation and note that when you pay yourself this money, that it was your owner compensation replacement. Claire, is there anything else you want to add on that? I want to make sure I'm clear on what we're going over.
Yeah, no, that's super clear. Someone does have a kind of related question to this though. So it is on self-employment, and it is, so they want to know, so as a sole proprietor, self-employed person with no employees, would all the PPP funds that I received be considered payroll expenses and forgivable? Does it matter if I still spend the 75%, 25% when I have no employees? My bank gave me a choice of 2 amounts, and if I choose the smaller amount, I could use the funds without restrictions on what to spend it on. Have you heard of this, and is it true?
Okay. Well, I think let's go through like the rest of the funds. It's a good segue into the next slide. So again, there are rules about, again, the balance of the funds. And I think what this person is getting to is if you realize you have more money than you could possibly use under these circumstances, and we can't figure out another way to use it, it may make sense for you to either take a smaller loan initially if you haven't taken the money yet, or to immediately prepay some of it back to make sure that you're not accruing any interest against the amount that you know you're ultimately not going to be able to use under this program. So the rest of the funds, again, utilities, mortgage interest, debt interest, rent for a lease established before February 15th, retirement contribution. If you have a SEP for yourself, you can make basically 2 months worth of contribution based on, like, if you do it annually, just divide by 12 of what you did in 2019. That's your retirement contribution. So that is actually a nice way to use this if you did that last year. That will make up a pretty nice difference of part of this remaining 25%. But as the note says here, the expenses can only be forgiven if you claimed the same expenses on your 2019 Schedule C. So as an example, if you pay rent for a home office and you physically move money and there's a note in your Schedule C that you paid this much in rent, but it's actually, a rental balance that you're paying in your house, then that would be rent that you could pay yourself from this. But if you just on your taxes have an allowance that you're taking for a home office, then you can't pay that to yourself as a qualified expense. Claire, given that question, do you have other examples or perhaps other clarification around this and in terms of using the balance of funds? Because I think this is a place where most self-employed people, if they're paying everything through their business, are going to wonder, what do I do with this other portion of money?
Yeah, no, I mean, I think the biggest thing is anything that you were claiming through the business, any expenses that you were claiming through the business that falls under these specific categories as of that date and time, that's all I know to be true. Right. So, and then utilities, similar to the previous slide, being described as, water, power, gas, of course, telephone, mobile, internet. Those are the most obvious ones. I've heard a few others being thrown in there, but quite honestly, I mean, unless you want to do your diligence and go through the actual CARES Act verbiage and to see for yourself, I would stick with that because those seem to be the most common if we are going to ensure any level of forgiveness. Obviously, not everybody has those expenses, so that does come into question how to utilize the rest of the funds. And in which I've said, and in talking with other tax colleagues of mine, I know some folks who are allocating the entirety of their self-employment PPP loan and spreading it across to 8 weeks as, to pay themselves essentially. And I mean, I guess that's another alternative if for some reason you weren't already writing off, things such as rent or mortgage interest or any of those other listed utilities prior to February 15th and they were claimed somewhere within a 1040. So that's the best I know so far.
So on this utilities, there's an ongoing FAQ that the SBA updates from time to time. And usually we try to put it on our social media channels, LinkedIn, other things, like as we get clarifications on these things. There's still a number of things about forgiveness that are a work in progress, and we would expect there to be some clarification and updates. And I know it's hard to do this as you want to spend the money and know it's going to be forgiven. But there's been a request for clarification around utility, around additional uses of funds. There has also been pushback from Congress, who did not create these or did not have these restrictions in their allocation, of saying you should be able to use the 25% for any non-1099 that you need to. So we'll see, it could be adjusted. So I would say if you're not sure, again, if you're just really concerned that you wouldn't be able to pay anything back, it may make sense to just reduce the amount of loan or pay some amount back right away so that you don't end up in a repayment scenario. But if you're not sure and you're willing to wait out that this is a developing story, you can hold on to the money, and it could be by June 10th, June 15th, there's a clarification on this that allows you to use the money in a broader sense. So it is a little challenging right now since the SBA did not write all of the rules clearly from the beginning. There are updates happening, every 3 to 5 days, depending on the conversations going on in Congress and what's happening from a PR sense. Okay, so the fine print on these things. So the 8-week clock starts from the day your lender deposits the money in your bank account, right? So that's a really important date to know. Count out 8 weeks from that point, and then make sure that I would say in like the week to 2 weeks before, you're very clear on how you're going to use the balance of the funds. So for those of you who got funds back in April, this is coming up at the beginning of June, right? So this next payroll period is going to be really important for you to figure out the balance of use of funds. If you just got your funding within the last week and a half, as most small businesses did, your clock is very close to the end of June 30th or perhaps even past. So, again, we're looking for clarification of if your 8-week deadline is after June 30th, how exactly does that work? If you don't use the money or are very close to using the money within 8 weeks, what happens? So we know that the 75% that has to go to payroll or your self-enrollment payment has to happen in these 8 weeks. If your payroll is going to happen a couple of days after, you can nudge up your payroll deadline for your 4th payroll to kind of get that in, put expense reimbursements that you would have done on the last of the month or perhaps, the first week in the following month. Make sure you have all of those in, any qualifying expense reimbursements that you can do. Make sure all of those are in, within the last couple of days of your window. If you need to run a special payroll for this, we'd strongly encourage you to do that. It's very important that you mark that the money was paid out and have evidence of it before the deadline. Okay, how do I calculate headcount? Okay, this one is a little complicated. So there are actually 3 calculations you do, and then we pick one of the numbers. So you look at the number of average full-time employees, which I believe is 30 hours a week or more, right?
It's 25.
25, is it? But can it be per company? Some companies set it at 24 and some set it at 30.
Yeah, that I'm not sure.
So look at, consider what your definition of full-time equivalent is, whether it's 24 or 30. For the 8-week period, so you count the number of employees you had in the 8-week period following your loan disbursement date. That's calculation 1. Then the number of employees you had, full-time employees from February 15th until the end of June last year. And then how many employees you had from January 1 until the end of February this year. If you do the calculations below this and you choose the larger number. So this is, again, a little tricky. There are sort of, three ways to look at it, and we're allowed to choose the one that's most beneficial to you. But the whole goal here is to try to get a number that's 1 or larger to show that your head count was at least 90% of what it was earlier. So if your number comes out to be less than 1, again, there's a chance that that will decrease your forgivable expenses by percent per percent and proportionally. Claire, anything you want to add or clarify on this one?
No.
Okay.
It's good.
This is actually a clarification from last week that will probably help a lot of you. What if you offer your employees to come back full-time at the same salary and they don't want to return? So the way to document this is you have to make the return offer in writing, and you have to offer them the same job, same title, same wage. If your employee declines to return in writing, right, they turn down the job offer, then they're deemed as counted in your headcount, right? So if they refuse to come back, you're not penalized for the fact that, maybe the extra $600 of unemployment, they'd rather keep getting that. They're not ready to come back yet. So as long as you go through the process in writing and document that you offered them the job and they don't want to come back, you get to count them in your headcount counts as returns. But you do need to provide that offer and decline in your forgiveness documentation. Another question we get a lot is, could I hire somebody that, maybe I can pay with some PPP money if my headcount's a little short? So anyone that you've added to payroll after March 1st cannot be paid in PPP funds, right? So this is another deduction. If you have new hires on your payroll since May 1st, you'll have to take that out of your payroll in terms of paying for them using PPP funds. So this is not a workaround to try to get your 1099s paid for a couple months. If you don't have enough qualified expenses to use the other 25%, we are still waiting for clarification on this, as I said earlier. You can use more than the 75% toward payroll. If you have qualifying payroll expenses that are more than 75% in that 8 weeks, you absolutely can go ahead and use 100% of this money for payroll related expenses. But if you are kind of just eking out that 75% and looking for the other 25 and you don't have a lot of expenses against it, we're still waiting to see if you may be able to roll some of that additional amount into future qualified expenses that happen after your 8-week window and have those. But that's a to be determined, and we're waiting for the SBA to clarify that.
Sorry. Oh, did you call me out?
No.
Oh.
I thought you wanted to talk about the extra 25%. Okay. So if you find out that a portion of your loan is not forgivable, it's not an all or nothing situation, right? It's possible that you can get partial, substantial, majority forgiveness, right? But I think the thing that we're asking you to look at and keep track of here is if your expectation is you only want to have 100% forgiveness, we're trying to give you as much information to assess what you will be able to have forgiven in terms of your planned expenses, and set aside any money against that so that you don't find yourself with a loan to pay back. So you can get partial versus full forgiveness. The balance of the loan, so any amount that's deemed not forgivable, you will have to pay back, along with any interest that accrued from basically tomorrow. It starts accruing on 5/15. And you don't have to make any payments against it for 6 months. It's deferred, but interest will accrue during those 6 months. So any amount that's not forgiven plus the interest against that amount, you'll have to pay back. And you have a total of 2 years to pay it back. The interest rate is at 1% per year. Each bank got to choose how they were going to calculate interest and interest accrual. So you have to look at your individual bank paperwork to find out what your interest added per month is going to be. Some did it monthly, some did it on a daily 360, some did it on daily 365. It's a small difference, 360, 365, but it will make a little bit of a difference in your payment. So if you go through this process and figure out that you are going to have a loan balance, you can either set aside the money, keep it just in case you change your mind, but then as quickly as possible after June 30th, make a prepayment like against what you think your balance is going to be to try to zero it out. Or you can continue to keep that money, treat it like loan proceeds, use it. We think you have to still use it for qualified expenses. We're not sure yet. But you can keep the balance and use it. You just have to pay it back within the next 2 years. So in that, like if you had money left and you could fund an additional payroll or a portion of a payroll after the 8 weeks, that would be a qualified use of funds or paying for benefits. So again, this is a place where like the forgiveness language is pretty fuzzy yet. So we're waiting on clarification of exactly what happens if there's money left, if you can use it after, will it be forgiven, etc. So for now, for the absolute most conservative approach, you want to use 100% of it within 8 weeks. But again, the SBA has kind of been in real time changing this. So if you just are super concerned, it's keeping you up at night, and you would feel better if you prepaid the additional money, you can always give money back to your bank at any point and just make a prepayment if you think that you have extra money on your hands. But I would encourage you to keep it as long as possible, because the rules are ever changing on this, and you might find out that in June you're allowed to use it in a slightly different way. Okay. And then this last one, we have two more, the EIDL advance. A lot of us applied for the emergency disaster loans through the SBA. It was just a common, simple application. And at the end, it said, would you like to receive up to a $10,000 advance on your loan, right? We all checked yes and put in our bank account information. And sometime in the last 2 to 3 weeks, you may have seen somewhere between $1,000 and $10,000 show up in your bank account from SBA Treasury. If you got that grant, it counts against your forgivable amount in the PPP. So meaning that if you got $1,000 from the EIDL emergency advance, you automatically have $1,000 that isn't forgivable from your PPP loan. So those proceeds from EIDL are deducted from your forgiveness. So again, if that's a point of concern and you can set that EIDL money aside to pay it back at the end of the loan or at the end of the forgiveness period, or use it to make a prepayment, then you avoid this. But you will, don't be surprised if in your forgiveness it comes back and there's somewhere between $1,000 and $10,000 that's carved out that you weren't expecting. The last one, to offset that crappy news I just gave you, this is good news, that you may have gotten a letter from your bank in the last couple of weeks about, like, please make sure you absolutely needed this, you have economic need because you just checked on a federal document that you are attesting that you absolutely need the money and you have economic need, right? It's a scary letter. I know Chase sent them. I think Bank of America sent them. Like, it was definitely unsettling, and I got a lot of calls from people saying, like, do I need to give this money back? So as of yesterday afternoon, the SBA clarified that anyone who took a loan of less than $2 million, they will not investigate your economic need. They're just going to take your word for it, right? You still have to meet all the other requirements for forgiveness, but you don't have to worry about when you go to forgive this that you're going to have to provide broader financials around your personal assets or, you know, what the company had in the bank account. You're given safe harbor. They're just going to take your word for the fact that you needed the money. So that is some good news, like that scary bank letter if you were thinking about giving the money back, because today is the last day, no fault, to give money back. And they're just going to, like, kind of give everybody amnesty if they took a loan they weren't supposed to. So if this was something that was worrying you and you're thinking about giving the money back, if your loan is less than $2 million, you will not have to prove any economic need for forgiveness. If you did take more than $2 million, then just expect that there will be an audit of how much money you had in the bank leading up to this period. If you're an individual, they're going to ask for your personal bank accounts. If you did this as a sole proprietor or self-employed person, if you did it through a company, then it will be the company's bank accounts. So if you're concerned about the need requirement and this impacts you, today is a good day, this afternoon, to just jump on the phone with your accountant and figure out if there's some portion that you may want to return for a no-fault cancellation. Okay, so some best practices for forgiveness. This is around more accounting, using your bank accounts, things like that. I'm gonna hand this off to Claire, because she's the person who told me how to do it. So go ahead and take it away.
Awesome. So to Jill's earlier point, as we start to think about what the review process is, or the forgiveness review process starts to look like, we really want to make sure that we want to make it as easy as possible. We want no questions asked when they start thumbing through every single transaction and looking at every single balance of all the bank accounts that the PPP money might have touched. So my best and immediate advice is to just start by opening up a dedicated bank account. This way, you can transfer the funds that you would have received through PPP directly into that dollar for dollar, cent for cent. And then from there, rewire and move all of the money to the allocated expenses from that bank account, so that again, the statements that you incur as a result of having the separate bank account are just a clear and easy way for whomever is auditing, you know, this process and your accounts to make sure that you are in the best position to get forgiven. And I understand that it's probably a little bit tricky to go to some of our banks and open up in person a bank account. So I know a lot of us will have a tendency to maybe just have like a secondary checking or a secondary savings that we're not really maybe doing anything with. Regardless of what kind of balance you might have, this could be a great opportunity to move some of that money around, especially if you're carrying a really low balance, and transfer your funds there to make it easy. The other thing that's not mentioned on this slide as well, and something I was able to do is, so I bank with Bank of America, and I didn't want to go into the branch to have to do the whole thing. I was actually able, through the mobile app, to open up a brand new checking account through Bank of America. Yeah, so that's absolutely an option. I would consider it. Check out the mobile apps. Sometimes it's easier to use the mobile banking apps than it is to just actually log online, which is very much the case for Bank of America. So I imagine potentially also the case for the Wells Fargos and the Chase and the Cities of the world. But yeah, as much as possible, you really want to just best position yourself for, you know, that 8-week hit, so that as soon as you're ready to, you know, get into the process of forgiveness, that you are just ready and everything is clear and you're not stressed out and questioning anything, because everything is just super buttoned up from the get-go. Okay. Okay, so what you need to show. Basically, assuming that you do have this separate bank account, which again is the best practice, then you'll want to first collect all the statements from that 8-week period to make sure that you have every single transaction listed out. If you use an accounting software, even better, because this way you can just pull the general ledger reports from that time period and create something that shows exactly what would have come out of your bank account. So you want basically all the documentation in the world. It is essentially some level of an audit that is happening. So it's bank account statements. It is any kind of accounting system report. If you have, let's say, your telephone or mobile bill that you're applying it to, or even the mortgage interest or rent checks, you want to get all of that documentation. So say you cut a check for rent, you want to make sure that you have a copy of that rent image scanned somewhere. You want to make sure that if you are paying a phone bill or an internet bill, that for the month within that 8-week period, that you are saving that so that it does come hand in hand with the bank account transaction report, also with the accounting system report, so that it's just all lined up and ready to go. If it's paper, get yourself a digital scanner that you can just snap a photo with your phone. Genius Scan is one that I like. It's free, and it can send to literally anywhere you want, which is great. And if you do receive, I mean, this is super extra, but as somebody who does bookkeeping, I will be extra in this way. But you know, if you have a bill and then they send you the receipt of payment, I would save that too. Just to be super duper crystal clear and make the loan forgiveness as painless as possible. You want to just go into it thinking, how quickly can I get this forgiven so it's one less thing I have to worry about? So as you are distributing, you know, the allocation of these funds to all of these different places, you just want to make sure that you have every single paper, receipt, bill, invoice, statement, report, whatever you need, saved in a folder and just ready to share it with whoever needs to see it the minute that they ask. And the other thing too is if you are running payroll or you are working with certain banks, they've done us the justice of actually creating preset reports, which is awesome. So in the case of a payroll provider, Jill and I work with Gusto. they're amazing, and they have been proactive in the sense of being able to create these PPP tracking reports for payroll specifically that automatically nets out the federal portion of the calculation from your payroll, which is awesome. So that for every single time you run payroll, we get to see exactly how much has been used by the PPP loans, and we can just essentially track how much we have left to spend over whatever remaining time frame we have against our 8-week period. And maybe the same goes for certain banks too. I mean, every bank is absolutely different, but it doesn't hurt to ask, especially if you're working with a smaller, more regionalized bank. I find that they tend to be a little bit more proactive in that sense. So certainly, ask away and see what resources they have that can help you track this stuff a little bit better. You would be surprised.
Oops, so sorry. Okay, that's our documentation of use, right?
Mm-hmm.
Okay, so that's sort of the broad strokes of everything we know today about the PPP. So feel welcome if there are questions or follow-ups or anything, please start putting those into the Q&A box. And we'll start looking at if there are specific PPP questions. We're gonna move on to the next part about other loans and other revenue sources. But we'll come back in the Q&A, and we have 30 minutes allowed for the Q&A here. So lots of time to go back on any PPP questions. So please feel welcome to start adding those into the Q&A. All right, so if you didn't get funding, you're sending it back, or it just simply is not going to pay all your bills, we put together a few more ideas. For those of you who are open to loans, the EIDL disaster loan program is still happening. I know it's been massively delayed, but they are starting to open up and look at applications. So keep an eye on your email. If you filled out an EIDL application, the general 5-pager, they are now coming back and asking for additional information and starting to move into that underwriting. And that money comes directly from the SBA. If you haven't applied for this, they are only taking applications currently from agriculture-based businesses. But if you applied earlier in the period, up to the point that they locked out the application, I think about the 3rd weekend in April, they are now starting to consider those applications. The downside is originally they said the loans were up to $2 million. The funding and the demand don't match up on that. So now they're guiding that loans will be about $150,000 at the most. So if you were looking for a larger capital infusion, this is probably not going to be the program for you, but it doesn't mean that some amount of loan won't be available. And remember, on these EIDL loans, it is a 30-year repayable loan at 3.75% for for-profit companies and 2.75% for not-for-profit companies, tribal entities, and charitable organizations. The other piece to keep in mind here is if you qualify for the 150, they may net out your PPP. So if you got a larger PPP loan, it may wipe out your eligibility for the EIDL, unfortunately. But there is a second type. If you expect that you'll get an EIDL loan and there is going to be money there, there is a second type of advance on the loan called an SBA Express loan. And you can go to sba.gov and click on the COVID resources. This is one of the types that's available. They can give you up to $25,000 as an advance loan, and then they will roll that $25,000 into your eventual larger EIDL loan. So if this is an amount that would make a huge difference for you, looking for the express loan that eventually will be put in an EIDL loan, say 6 to 8 weeks from now, could be an option for you. And the last one, and don't throw anything at your screens, this is a really big number, I know, but there's something called the Main Street Loan Program. This is not through the SBA, it's through the Fed, through the Treasury Department and the Fed. And it was a mid-sized company lending program, meaning for 500 and up, but they've brought the numbers down. They are allowing larger small businesses to apply for it. The loan amount starts at $500,000, at $500,000. But if you are, and the way that they're going to consider your eligibility is they're going to look at how much profit you had last year, and you can qualify for 4 times your EBITDA or 6 times your EBITDA, and that's the amount of the loan eligibility that you have. So as long as that number, if you've made at least $125,000 last year, you could qualify for this $500,000 loan. The loan terms are an amount over like LIBOR over a standard interest index. It's 3% over whatever that is at the point you take the loan. So right now that would be about a 3.8% loan, which as far as corporate loans go is pretty favorable. And then the way that the repayment works is you pay back interest plus principal almost like a bond every year, starting at the first year through the 4th year, you pay a quarter of the eligible amount. So if that's something, or you're a much larger organization, there's a whole tranche of this that goes up to about $10 million. So if you're a much larger organization, this could be an option for you. But just something that kind of is flown under the radar, and they aren't really talking to small businesses about this. If you want to stay away from loans, state, local, and private funding are all still available. Lots of corporations have set up funds availability. Allison has been keeping a wonderful list of emergency funds, some of which CCI is administering directly. So if you haven't recently looked through that list, she is updating it all the time. So please go back and look for other grants and other sources that may be available to you through the arts community and through private funding. But we want to shift gears a little bit because we know a lot of you don't want to take on debt and have that obligation in the future. So we're looking at a few more ways to generate revenue. And as an artist or an arts community, one of the amazing options available is something called Patreon. And this is like based on an old-fashioned patronage system, right? It's just meant to set up monthly memberships for people who want to give you money to do what you do. And a lot of people have established Patreons during this time. So you just create packages, and it may involve at some point in the year a dinner with you or a piece of art or something like that. But effectively the person's opting in to say, I want to fund you. I want you to make your stuff, right? So Patreon takes a small amount of the funding. It's not a GoFundMe. You don't have to get like a bulk of money and then they pay it out to you. This is simply an individual can say, hey, I like that idea of having a membership where I send you some money every month. And then they do it. They set it up to automate. The money goes into your bank account. So if you have some kind of creative fan base, something like that, adding a Patreon to your website is a great way to let people just simply say, I appreciate what you do, and I'd like to fund it in some way. So if this is not something that you're familiar with, I'd really encourage you to check it out. Because again, most of you have fans, most of you have people who want to contribute to your art, to your organization. And this is a really good way to do it. Another is crowdfunding. Often people will do crowdfunding for no return of equity or not expecting anything in return. They just want to see you get off the ground. So this NASAA site is about every state there's federal rules about crowdfunding, and then some statewide rules, state-by-state rules about crowdfunding. So this goes into how to crowdfund depending on the state that you're in. But crowdfunding is a little bit more like a GoFundMe. That is crowdfunding, but you can also just make a crowdfunding offering on your own. You don't have to use one of these platforms. You can simply say, we're selling 50 memberships of this in our crowdfunding, and this is the reward, and you buy it, right? And then you just have to report that you did that. So certainly a way where people can make contributions, have a membership in a different way, but without you having to give up any equity in your company or create a future obligation. So this is a sad, but one of my favorite stories. So right after I had my son, I had my favorite KCRW mug and I banged it on the counter and the handle broke off and I was so sad. And my mom said, I want to get you a different one. So she went on the KCRW website and she realized the mug was going to be $85 to replace, right? I never thought of my KCRW premium as being an $85 mug. But from that moment on, I got a lot more interested in KCRW's revenue model. And in looking at now, once a year, they send me an option to get a mug. for being a sustaining member at $32 a month, right? Or you have to be give a one-time donation of like $150. You can't buy the mug, right? You can't get it any other way. I looked up, like, from Printful, if I printed a mug like this, it would be $9. It would cost me $9 to ship it to you. I paid $384 for this mug last year. So the economics of this work pretty well. So if if you haven't done merchandise, and we'll go through this on the next program, if you do some kind of membership and there's a gift with the membership, something like that, people place an outsized value on that thing, the exclusivity of that thing. So in terms of like doing some kind of membership program, some kind of giveaway, it actually can be a way to get, a really nice return for the amount that it costs you. And the site that I'm referencing here is Printful. If you aren't familiar with Printful, it is basically a way to get your designs out there with no cost to print or create. They are a global organization, but they're based here in Southern California. You can upload your high-res design files, and they will print them on hundreds of things, right? Leggings, throw pillows, art prints, tote bags, right? Whatever you want, but you don't have to pay any money up front. You get paid as you sell your merchandise. They print it, they drop ship it in real time, they use your files. You can have some inventory if you have high demand. They'll hold it for you and ship it. But basically, if you want to offer a whole array of merchandise around a design that you have, a piece that you created, your most popular piece, what you're known for, you can instantly have a merchandise line. All you need is high-res design files, and then you put those on a Shopify storefront, which they will help you set up. And you can instantly have a global merchandise program. They handle all the fulfillment. So, it's not as cheap as if you just printed, say, 1,000 of something and had them in your house, but at the same time, you don't have to lay out any funds up front. You can use designs that you already have. So this is actually a really great way if you're thinking of like generating some extra money through merchandise. You don't have to guess what sizes or merchandising mix you need. They will take care of everything. So if you aren't familiar with Printful, I would encourage you to check them out. If you are new to online or marketing, you really need to get more of the word out about what you do. Almost all summer internships have been canceled. Cal State is 100% virtual till next year, and probably about a third of college students by last estimates are going to take a gap year next year because they just want to wait till they can be back on campus. So we're going to have all these students waiting around for something to happen, right? And they're all having to live at their parents' house. So if you're new to e-commerce, if you're new to online marketing, if you need a press kit, anything like that, there are journalism majors and computer science majors and tons of students out there who are just looking for something to do. And there's a potential that you could get them, if they are in school, they can do course credit. If not, you still have to meet federal minimums for paying them. But in terms of getting someone who could be an intern with you for a full year, this is a year where you could do it, right? They could probably start very soon this summer, and you could give them a long-term project and something to work on. So this could be a very effective way kind of to add into these new programs that you want to launch, but you may not have a large budget for. In totally different direction, good puzzles are very hot and they're very hard to find. Printful can make a puzzle for you out of one of your prints, but there are also companies out there that will license your work and pay you an initial licensing fee and then an ongoing royalty. This company, Jiggy, specifically works with female artists, and they pay you a license fee and then a rev share for every puzzle sold. You can market them yourself and take that cut. And there's also a very good puzzle company. They accept submissions, and if they accept your submission, they also pay a licensing fee and a long-term royalty. Or you can just upload one of your own designs that you think would make a cool puzzle and have Printful send it out for you. Oh, and in terms of like high-end puzzles, they're typically $30 to $60. So they're actually very good margins on puzzles, and people are looking for new puzzles. People are doing puzzle competitions where they'll send you one, take one for themselves, and then kind of film that who can do the puzzle the fastest. So you get to sell 2 puzzles at a time. If you've done a lot of photography, a lot of Instagram, you've thought of putting it together into a book, Artifact Uprising is a similar option, but at archival quality, where they will print on demand. So you could take pre-orders and have them produce the book for you, or set up the book and then just as it's ordered, they will print. So again, you don't have to take on a lot of costs in order to produce something that's a long-term IP asset. Let's see, Teachable is a course platform where you can make passive income from selling access to video instructions and digital how-to kits. There's a free level of Teachable, so if you want to try it out. But this is basically about making videos of how you do things, and then you can market them, they market them for you. But it's a great way, there are so many people looking for how-tos right now and at a higher quality than YouTube, possibly with some schematics, possibly with some instructions. And this is something that over time you can continue to market as well as immediately make some funds from. There's also a lot more demand for tutoring and classes. In terms of adding arts back, I think there are so many parents who are looking for summer enrichment because camps are going to be canceled. So if you are just looking, if you're an individual and just looking to make some money quickly, you can teach English to native Mandarin speakers through VIP Kid. They actually pay very well. So you would be teaching students in China. But you don't have to know any Mandarin. So it's actually a very robust platform. And the people I know who have taught on VIP Kid have had a really good experience. Let's see, there's also a lot of need for language support for US kids. So if you speak a second language or you're a native speaker of or English is your second language, there are actually very good premiums for offering language lessons right now, and also 30-minute live Zoom classes. So if you set up a payment gateway, people can pay in advance for one-on-one or for groups, but there's actually a lot of demand for this right now. And leading beyond that, homeschooling is exploding, but not in the way that homeschooling we would expect, where people are looking for tutors and experts to be the teachers. In particular, a lot of the people who are leaving cities and looking to move out to the suburbs with their kids, but don't know that they're reliably going to have school, are considering hiring full-time tutors. So if this is something that your organization can offer, you can offer resource kits, you can offer virtual camps. If you have a membership organization and you know those people would be willing to take on teaching responsibilities, whether in person or remotely, you could offer teacher-tutor matching because there's a lot of demand out there. Arts enrichment, music lessons, all the way to giving up your place and living with a family to provide education and childcare for the next 6 months. So if you can offer education resources, there are a lot of parents willing to pay, and they are not expecting their kids to go back to conventional school for about 12 to 18 months. Okay. So those are a few ideas we came up with. I hope you find some of them helpful. In particular, I think the merchandise program where you don't have to have any dedication of cost upfront is actually something that's great to offer if you have something visual that you want to print. Let's see, let me jump out of the presentation. When you get this, all of our contact information is on the last page. I'll wait here just for a second if you want to take a screenshot. But that gives us exactly 30 minutes for Q&A, right?
Yeah, and we've got about 10 questions that I've got queued for answering live. Today was a good question day, that's for sure, which is why I was a little lost when you called me out. I was like, what? Okay, so the first question, can you collect unemployment benefits for the weeks not covered by the PPP loan?
Yes. So out of these 8 weeks, so if you applied for unemployment prior to getting your PPP loan, from the point that you start, I'm assuming this is a self-employed question, right? From the moment you start your self-employed 8-week payment, you cannot collect for 8 weeks. But at the end of that 8 weeks, since you're already qualified, you'll decline those 8 weeks. And at the end of it, assuming you use the funds and you're not allowed to use anymore, you could again collect unemployment.
Next question, what if we reduced employees' salaries? Can we include payback for that discounted amount?
You mean, is that a back pay question? Can we use it to pay them back?
Yeah, that's how I'm understanding it.
I don't know that that's acceptable. You can cover an entire payroll that's from an earlier period, but you have to do it succession of 8 weeks. So paying back pay, double paying in a period to someone, I don't think would get you forgiveness, but that's a good question for a clarification.
Yeah. Yeah, I wasn't sure about that one either. Okay, what if your bank counted all of your employees as individuals and got to 13 when you only actually had 7 FTEs, full-time employees?
Oh, so meaning you had more employees as of the end period that they used than you actually have right now. Would that qualify you as a seasonal employee? Are you a seasonal employee?
Yeah, I don't, let me see.
Okay, let's see here, I got a hand raised. There. Let me see, Elizabeth, if I can find you so that we can.
It's top of the queue on open.
Okay, Elizabeth, I activated your microphone.
Thanks. Hi. Thank you for getting back to me on that. No, actually, the bank, I put down 7. It was I got my loan very early, so they probably didn't know what they were doing any more than I did. But I put down 7 because I have like half of my employees are part-time and they equal 2 FTEs. My other full-time people are 5. So total them all up, they get 13. He told me to put down 13, so I did. But now I'm getting worried because really it's not 13 full-time employees, it's only 7 FTEs, 5 full-time and whatever, 8 others that are all full-time, half part-time. Some of them are very part-time because they're music education teachers.
Well, so we're looking at those 3 calculations. They're going to base it off of how many employees you actually had full-time in a period. And since it was based off your actual payroll data, you shouldn't have been overfunded excessively because they didn't say, oh, per employee, you get X amount of money. They said, we're going to take your payroll from this period and multiply it by 2.5. So I don't think you're going to end up with any weird alignment. And even if there was the number of employees were incorrectly calculated at the start, what you're looking at is like for forgiveness is you're going to calculate those the full-time employees for 3 points, and then how many you have on 630, right? And that's the number they're going to look at for forgiveness. So
well, I would have, I'm not to belabor this, I could always contact you later, but if it says 13, does it have to be 13? Because the reality is it's not 13 full-time and it never was. If that's too complicated, I can ask later.
Okay. I wouldn't like it wouldn't, if all of this is happening with your bank, right? Your bank is doing the numbers that they put in for the SBA. They're calculating based on your actual payroll, and they took an assessment of your headcount, but the way that they're asking us to report for forgiveness is we're re-reporting our numbers from those periods. So there's a discrepancy on your application, but it would be accurate in your records for the number of full-time employees that you had, right? So I don't know that the initial application asked the question of how many full-time employees do you have? So it would seem like this is a clarification to that more so than say like a mistake on the application. Does that make sense?
Oh, yes, thank you.
Okay, so the next question, if someone refuses to come back and we hire someone else in their place, could that be paid by PPP funds?
No. Now, you will get forgiveness against what you would have paid that person as if they had come back. If they refuse to come back and they write on a piece of paper, I decline this job, right? I refuse to come back. That is how you get that fund forgiveness, but you can't reapply it to a new hire, right? So the amount will be forgiven, right, as part of a total payroll, because their headcount and their salary will be counted. I think the weird thing then is that you'd end up with like some extra money that hadn't been paid to anyone, and then that creates the issue of like, what do you do with that actually unpaid funds? Is that just yours? So that seems like one of those SBA clarification questions, right? That they've said that person, you're not going to be penalized for that, but also then what happens to the money, right? Because they're also saying you can't reapply it to someone else. Let me get that one down.
Okay, so the next question, what if the only full-time employee of my organization was hired after March 1st? Can they be laid off during this time?
Yes. So technically you can't pay for them by PPP, and therefore you wouldn't need them in your headcount on the 30th.
What if you have a part-time or hourly employee, they haven't been taken off payroll but haven't been paid because they declined the hours you offered them in favor of other work they're doing for other part-time employees? Do they still count towards your full-time employees? No, they don't. We hired a new executive director who started April 1st. This person replaced someone who retired in 2019. Is the new person covered by PPP? If they started April 1st, no, they're not.
But you will get the money to use against the allocation from your 2019 employee.
Is the SBA Express loan as easy or simple to apply for as the 10K EIDL loan? I ask because most SBA loans are a bear to apply for.
Yeah, because the Express loan is tied to the EIDL and it's in advance, it's a common application. So it is it is a simpler process. It is not that 80-page application that you used to have to fill out.
I was originally told that 1099s were included for the PPP. This is coming from somebody who runs a nonprofit. I applied with a 1099, it was accepted. I run a small nonprofit, I am the only employee. I've received the funds. Have the rules changed about 1099s? I can't use a loan. I was counting on forgiveness. Do I have to pay it all back now?
Yeah, well, your portion of like if you applied it with a 1099, and yes, unfortunately, this was one of those things that they changed about 10 days into the process. So if you applied right on April 3rd, this was allowed, and about 6 days later, they made it not allowed. So the safest route is if there isn't you can't pay yourself through this process, and there aren't utilities and rent to be paid, then yes, your safest route is to return the funds and decline the loan.
Someone wants to know how to determine what to charge as a homeschooling resource.
Pricing is always a tricky one, but pricing is kind of what you want to charge. I have seen everything from $30 an hour to $100 an hour. Or by the week, or in terms of like, I'm covering this many weeks and I'm putting together a schedule with you and a curriculum. I see some people who do package deals and will do 10 sessions for this fee, but you know, it's not a la carte, it's a flat fee. So as you're approaching, I would think about like what kind of families you want to work with, what their economic situation is. $25 to $30 an hour for any kind of group is certainly kind of within an acceptable range. If you're on an individual basis, I think you can go higher than that. But again, it depends on what area you're in and who you want to work with.
Okay, so we have a couple of questions around bonuses. Mm-hmm. So for full-time employees already on payroll, can they be paid out a bonus and have it forgiven?
I don't know that I do it as a bonus, but you could give everyone a temporary raise. Because it's okay. wages, tips, commissions, right? Salaries. So a bonus gets called out differently as it's recorded in a payroll system. And so it shows up as a total in your W-2 at the end of the year, but then it also carves out an extra tax against a bonus. So if you were trying to use the PPP funds for people who are already on your payroll before this date, it doesn't say you can't pay them more, right? So there may be the matter of that you may want to increase their hourly rate or their total salary temporarily. You could certainly pay them above what you were paying them. But I don't know that I'd do it as a bonus because it doesn't seem clear that just because of the way the IRS considers bonuses, that may be carved out as an inappropriate use of funds.
Yeah, because it looks like we have someone who has an employee who is going to be leaving the company, but all within the 8-week period, and they have about 2 weeks of vacation pay. So they're asking if it was possible to pay it that way, but it looks like there's a chance that they might have already tried to or are trying to pay that full-time employees vacation time as a bonus instead of actually calling it vacation pay, if I'm understanding that correctly.
Well, it is included within qualified payroll expenses if you have to pay out paid leave, vacation time, and other expenses that like are on your books as effectively deferred payroll, right? You owe those to that person at whatever point they leave the company if they haven't used them. So if that person is leaving and it is vacation payout, PTO payout, as is required under the law of your state, that would qualify as a qualified payroll expense.
My client is the owner of a nonprofit and she is the only employee on payroll as director and the rest are contractors. She received her funds last week. I believe that 75 can be used for her salary over 8 weeks and the rest for qualifying business-related expenses. Regarding her salary was temporarily reduced from April through October last year and to be back paid in December 2019 to match her full salary. This was for cash flow needs. Can the 25% of PPP be used to pay for this accrual?
So you would be paying her above and beyond her salary obligation, right? So as long as the maximum you can pay to any individual is the equivalent of 100,000 per year, right? So let me just grab the old calculator here. All right, divided by 52 times 8. So the most you could pay her out of PPP funds would be $15,384 over the 8 weeks. But if her salary currently that you're paying out is below that level, below $100,000 a year, you could top it up and make up the difference up to $100,000, an equivalent. So about, if you're going to pay out less than $15,000 to her in the period, you could bump it up as high as $15,000.
If you don't get up to 80%, clarify what happens. I assume that question is in reference to if you can't get your payroll allocation up to 80%, what happens?
So 90% FTE, on payroll it would be 90. Right, that's why we're looking for that 1. Do we meet the number 1? But it's actually 0.9.
Yeah.
Yeah. So if you didn't, so just in general, if you didn't meet the higher back provisions, then proportionally, let's say you met 84% of the provision, 84% of your loan would be forgivable, and the other 16% you'd have to pay back.
So paying a commission, we owe an employee for last. So if we pay out a commission, the total owed for the employee for last quarter, will that count?
Yes, commissions are eligible under payroll forgiveness. So as long as that commission doesn't take that person over a total of $100,000 in compensation for that period, like on average, then that's fine to pay out. and you can use PPP funds for that.
The amount to pay myself as salary from the PPP funds based on the 0.154 figure, would that include any rent and utilities and other expenses, or would they be in excess of that amount? They would be in excess of that amount.
Yeah, so the 0.154 is your payroll, right? The owner's payroll equivalent that you're just going to write yourself a check for. The balance that you got under your self-employed, you are not in the same boat. It's not the 75-25. It's pay out the amount that's your payroll equivalent, and the balance can be used for the other qualified expenses.
And am I to understand that if I am paid by 1099s that I would not be able to pay myself and have that forgiven? Would any of the PPP loan be forgiven? That depends on whether or not the PPP loan was given to you through your business entity, or if it was given to you as a self-employed individual. So if it was through self-employment or as an independent contractor and you're paid via 1099s, then that should be forgiven based on the calculations you run. But if it is under your business entity and you were paid by 1099s, then the answer is no. That makes sense.
Okay. I'm going to do a little bit of a different take on that one. You can continue to earn money while you get paid this, right? So the people who owe you money from contracts and pay you on a 1099 basis, they should keep paying you. That's separate, right? This is meant for you should you have a decline in what you're able to pay yourself based on, slower payments coming in or work being canceled. This is meant for you as a self-employed person to have 8 weeks of the equivalent of what you paid yourself profit last year. But you can continue to take on new projects. You can continue to be paid 1099. It's not like unemployment where you can't be paid while you're paying yourself PPP money. It doesn't work like that. So as long as there's work to be done and you're doing the work and you're getting paid for it, that is completely separate from self-employed PPP. Okay. Okay. I'm the only employee. Hi, Melissa. If I'm the only employee of my business, do I have to spend the 25 on utilities, or can I use my calculation in PPP loan to pay myself? If you're paying yourself as an S Corp on W-2, or are you paying yourself based on self-employed income or your LLC? Okay, but do you use a payroll or no payroll?
She says LLC.
LLC, but she's not required to have a payroll. She's an LLC. If you're the only W-2 employee of your business, yes, then 75% on a W-2 basis, you need to pay yourself as payroll, retirement, other qualified expenses. If you give yourself paid leave, the other 25%, you can pay up to 100% on payroll. If it takes all of that money to pay to yourself and you're a W-2 employee, it is okay to use 100% of it to cover salaries and compensation, as long as you're not over $100,000, the equivalent of $100,000 for the year. But you have a floor of 75%. Oh, you just transfer?
Yeah.
Then you're on the self-employed calculation. It's based on your what was on your Schedule C.
Okay. How do you recommend dealing with record keeping for expenses that are allowed but typically paid out of personal accounts? For example, forgivable mortgage interest and utility expenses for working out of a home office. It doesn't make sense to me to transfer money to my business account for expenses that are only partially deductible. Do you think having statements and accounting records for those expenses paid out of a personal account will suffice? Absolutely. I mean, if you're not in the business of wanting to move money around, which is understandable for certain scenarios and certain folks, then absolutely I would save all of the statements and all of the accounting records that are coming out of your personal accounts. I would also, in addition to that, just maybe save those personal account statements that any of the expenditures for PPP are being used from, just so they probably will ask. They just want to know exactly how, who, where the money has come and gone from. So I would just have that ready to go as well, just for clarification.
Okay. Anybody else?
That's all the questions.
Oh, you did a great job. You answered 69 questions during this?
Yeah, no, that's why I was, that's why I was like, wait, did you just say my name?
I got it now. I did not. I had a full screen up on mine, and I could see the Q&A underneath, but I could not actually see the box. So kudos to you for pumping out all of those questions. Oh, there's one more. Employee hired 211 for full-time, did not start working full-time for a week. So you're in full-time, the person started full-time on it would be like
11.
Yeah, well, they would have to be full-time as of 2/15. So it may depend on when your payroll company put them in the books as full-time, or when you entered their move to full-time.
I mean, yeah, for something.
To be counted the following week, then they're probably in. If you did it on Monday to start on Monday and it was the 17th or the 18th, then that's too late.
The start date for this employee was 2/11. So yeah, so that should be fine. Can you tell us where we should be looking to see updates on guidance for things like what kind of utilities are allowable?
Okay. Yes. I have a very boring document available on my screen. I'll show it to you. There is something called the SBA FAQ. It is very tedious, I would say. It's not the most fun document to read, but it is, it's this. So you can see this was updated as of May 13th. This is the URL for it. It's on the Treasury Department website. If you search for Treasury PPP FAQ, it should come up. Anytime there are new clarifications, it's in this document, right? This is what lawyers and others are constantly monitoring for clarification on this. So anytime we see this update, date change, sometimes they push out an update. You can subscribe, I think, to get whenever there are changes to get an update, a notice of update. But just generally, if there is going to be an update, this is the place where it is. I mean, you see there's a lot of technical information in here. So like I said, it's not super fun to read, but if you're looking for the letter of clarification, this is what Claire and I read to find out, like, what's the current letter of what we need to do.
We have a few more questions.
And I would say in general, like, find, I follow a bunch of startup law firms on LinkedIn. They're all competing to get this information out first. So usually when there is an update, there's a flurry of legal opinions that they put out. So if you want to, you know, kind of, or I think they're on Twitter as well. Like, there's Cooley. Sure, I can put that link in. There is one called Cooley. There's one called Stubbs, Alderton and Markelis. There's, man, there are a lot. Those are the two I look at the most, but often, like, their partners put posts up. So yeah, I would just look for some law firms that you can flag for updates. Can you read that one? I'm going to go grab it.
Yeah. So what if our utility and rent billing periods don't fall neatly within the 8-week time frame? For example, my PPP was deposited on May 4th, but my rent payment falls on the 1st, so I would technically only pay rent once within 8 weeks instead of twice. Can I still count 2 months of rent for forgiveness?
Well, nothing stops you. I'm getting an echo all of a sudden. Nothing stops you from paying your rent a few days early, right? So if you do it as a bank transfer, do the bank transfer on a date 3 or 4 days early, for a notice for the following month. So you have May 4th. So you already paid the 1st. If you hadn't paid it, you could make the payment now. No, Claire, that's sort of like a fine line opinion, but to me, your May rent should count in terms of like you paid it May 1, or would you then want to prepay July or want to pay July's rent like 4 days early?
Yeah, I would go with paying it just a little earlier to be safe, because there's nothing wrong with that. That happens all the time. So yeah, I would just pay something. If it's within a few days, I think that's totally fine.
Yeah.
As long as it's not grossly like out of tune or out of schedule with what you would normally pay, like a whole month in advance or something like that, that starts to look a little weird. But if it's just within days, I think that's, I mean, it should be okay.
Okay.
Yeah.
All right, Allison, we'll give it back to you. I saw you put some resources in the chat.
Thanks. Yes, I dropped in the chat the link to CCI's emergency resources that Jill referred to earlier. We're constantly updating it with whatever opportunities are currently open and available. And as soon as we learn about new resources, we drop them in there. There's also links to other organizations' resource pages with even more links. There's a few webinars. There's all kinds of different things in there. So I encourage you to check that out. And there's a link to that on CCI's homepage. I put a link in the chat box. So do check those out, CCI emergency resources. And we have other upcoming workshops. We have a strategic planning workshop, and then Power Pivot, which is about sort of pricing and positioning or repositioning your artwork in moments where you may need to be pivoting in some of the ways that Jill was mentioning, but maybe something else too. Maybe you're moving all of your content virtually, things like that. We're also still working on programming new workshops for June. So keep an eye on CCI, sign up for our mailing list, keep an eye on our social media pages. Like I said, as soon as we're able, I'm gonna try and get the recording of this session up on the event page where you originally registered at our website. It may be on our YouTube channel as well, but just check our website. And I'll also have downloadable the slide presentation, and I may be able to also transcribe the questions into kind of an FAQ for you guys. That might take a few days though. So check that out. And thank you guys so much for joining us. Thank you, Jill and Claire. You guys are amazing. Astound me with your knowledge and clarity. Everybody, you'll also be receiving, if you registered, you'll be receiving a link to a feedback form, a Google form. We really appreciate your feedback. I'll share that with Jill and with Claire. Also, you can communicate through that any suggestions you have for future CCI workshops. So please check those out and just take a couple minutes to let us know what you think. Thanks, everybody.
Thank you.
Thanks, everyone.